All right, young families out there, the number one focus you need to have is to build a budget and to follow that budget. Living off a budget is very tough to do, but very important on your long-term financial future. So focus on a budget, whether you have kids already or not. Create a budget, follow that budget, and make sure you are not spending more than you are making. The second part for young families is to make sure you're paying off your credit card every month. Use a credit card it does build your credit score, which is very important, but make sure you're paying it off at the end of every single month. Do not carry your balance forward. It will hurt your credit score. The third thing ties into paying off your credit card, which is continue to build your credit score. So have at least one credit card, ideally two, and use those on an ongoing basis. Again, credit cards can be a good thing if you can use them for points, and make sure you pay them off at the end of every month. So down the road, when you go to apply for a mortgage or other need, the bank will look at you as a good borrower. Your credit score is essentially your SAT score in the financial and borrowing world. So you want a high score. It'll get you better lending down the road and better rates for your lending down the road. So very key to focus on. The fourth thing to look at is buy life insurance. Whether you have kids already or not, if you're married, get some life insurance in place. It doesn't have to be extensive. It can be some term 10, even some term 20 life insurance. It doesn't have to be a large amount if you don't have any debt like a mortgage already, but have something in place. Let's say you're a young couple and you're planning to have kids maybe, but they're not there yet. Go out and buy a $250,000 or $500,000 term 10 life insurance policy. And why I say that is because together you and your spouse have dreams. And if one of you suddenly passed away, the other person, hopefully can still live out those dreams. And having, a bit of money to get going with those dreams is a huge boost and doesn't set them back. The other part of it is that if you lose your spouse, you're probably going to have to take some time off, which will financially hit you. So to buy life insurance, if you're young, it's going to cost you maybe $10 to $25 a month. So it's a very small amount in your budget, hopefully. The fifth thing to look at is get a will in place. So you've probably never had a will. You're in your early, mid, late 20s. Meet with a notary or a lawyer and get a will put in place. There's also some online will resources that we'll put in the course as well that you can look at taking advantage of. But get a will in place, and all that does is basically, if you pass away, it tells your executor, which is the person that takes care of your estate when you pass away, where everything should go. So if you have assets, it just says, where those assets should go. If you're young, you don't have a lot of assets, it's a pretty simple, clean process, creating a will. Again, an online platform might be a good solution for you. If you want to do the notary or lawyer route, that's a great route as well, just a bit more costly. The last thing is start a savings plan, whether it's a personal savings plan for you and your spouse or an education savings plan for your kids if you have kids. An RESP is a great tool. I'll go over more than that in the investing course, but the RESP gives you a 20% grant on any money deposits that you make up to $2,500, which means that the government will give you $500 per kid per year if you're maxing out at $2,500. So it's a great return on investment. There's no other investment where it's a guaranteed 20% boost right off the bat. So it's a great savings tool. Plus, your kids are going to need money down the road for post-secondary education. So just, again, a great tool to start saving. On the flip side, you also want to start saving for your retirement, maybe down payment for a house, whatever it is. So start a personal savings plan for you and your spouse for what your dreams and goals are. And also start saving for your kids' education as well on the other side. So balance that savings plan and work that into your overall budget to make sure that everything comes flat at the end of the month so that you're not spending more than you're making.